Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Last week, I drew some lines on the technical charts and I put out my forecasts for what I thought would happen across the board in the major indices. And this week, what I'm going to do is show you just how well those signals played out in the market this week. This is a one-year daily candle chart of the Diamonds, which is the Dow Jones Industrial Average ETF. And this diagonal line right here is what I drew, and saying that I thought the market would bounce off of this support level, which it did, and then go up to test and fill this gap right here. Today, we closed the market with a bullish engulfing pattern. So what I think is going to happen for next week is I think we're going to continue up to fill this gap and again test that resistance line. So what I'm going to do is remove this line right here, and I'm going to remove that line right there, and then redraw what I think we'll see next week. So that's what I think will happen next week. Then once that gap fills, I believe we're going to turn down and then go back to retest this support level. Now, if you've been following the market, guys, and especially my weekly forecasts, you'll know that from January 1, right from the beginning of the year, 100% of the forecasts that I put out through the market reports, 100% were accurate, and what I said would happen, happened. This is not tea leaves and voodoo magic. This is real analysis using price history to guide us through the supply and demand that we see in the market. Each and every week, the signals come out showing us who's in force, whether it be the buyers or the sellers. And all I'm doing for the general public is I'm measuring the force between those two parties, the buyers and the sellers, and telling you who's winning the game, so to speak. So last week I said we would bounce because the sellers were tiring out. Let me just point something out here for you and why I was able to forecast this bounce here off the support. You see, when the market was pulling back last week, the volume was dropping. Do you see that? And when the volume is dropping on the way down, that tells us that the sellers are tired or they're running out of that momentum. Well, when the sellers start to slow down, especially at a key support level like we see here, the buyers start to move in at those very same support levels. So it's pretty basic, really. These signals are very easy to learn, and I spend each and every week trying to teach people how to read the signals so that you too can have 100% accuracy. Will that happen? I don't know. I don't know how much time you'll be willing to put into your study, but I can certainly say that with practice, it's not uncommon to get a 70 to 75% accuracy rate. And if you look at some of the other markets, like the Russell 2000, we'll take a look at RUT. That's a more broad-based index. And you'll see that I forecasted that the market would pull back from that trend line, and it did. So what does that tell us for next week? Well, let me show you again. This is a bullish engulfing pattern that's very, very reliable. These bullish engulfing patterns. You can see back here, there's a bullish engulfing pattern. That's when you have a large green candle that engulfs the previous day's red candle. And what happened after the bullish engulfing pattern? It went up. And if you go back in history and look, right here, there's another bullish engulfing pattern. A little hard to see, I'll zoom in there for you. Another bullish engulfing pattern where the green candle overlapped or encompassed or even eclipsed the red candle. What happened? It went up after that. Time after time after time, there's another bullish engulfing pattern right there. Very reliable markets went up. So if I'm looking at the charts right now and I see another bullish engulfing pattern, well, there's a very high probability that the market will go up to this resistance point, which is a downward trend line. And I think that once that point is reached, we could very easily see a pullback from that line, maintaining that downward trend. I am not seeing a bull market here in the Russell 2000. I'm seeing a reversal in the upward bull market that we had, and we're now starting to move to lower prices. So this could be a short-term rally next week, and then we'll have to see if the market breaks out of that trend. I don't think the market has enough steam behind the buy side to be able to do that, so I'm very, very cautious buyer for the short term. Now let's look at the Qs. That's QQQ. That's more or less the tech sector, representing most of the NASDAQ stocks. And what do we see? We see another big green candle on higher volume. You see that? There we go. It's pretty simple. Green candle, higher volume tells us the buyers are motivated. Now, what are we looking at here is another resistance area up at the top. So next week, there's a good chance we could rally up and move towards this resistance line, and then we'll have to see what happens with volume. So if you're taking a long position in the market, and you're buying any NASDAQ stocks, what I would suggest is you trail your stop up with the general market. So if you have a tech stock and the price goes up, then put a sell stop as it goes up. And then if you see the volume drop next week and we're approaching resistance, you might want to take a profit in that. Pretty basic strategies for trading. And the investors, it's a little bit tougher because they're more of a buy-hold type of a position there, but I still would be very protective even if you're a longer term investor, because as soon as the market starts breaking down below key support levels, and I'll show you where the key support levels are for the NASDAQ. Here's one right there. We start breaking down below that low, holy mackerel, watch out. You can see a lot lower in the NASDAQ, and you can even see that we're starting to see lower highs. So the caution flag is out. I'm doing my best to get the word out to the general public, and most importantly, you need to protect your account. Let's go back to the daily charts here and look at the spiders. That's the S&P 500 ETF. There we go, SPY. And you'll see that once again, my forecast came true. I said we would move down. Now you have to remember, this was last week. We put out the report here. I said we would move down. We would test this support level. We did. It didn't stay down below support very long. Came right back up, and now we have a bullish engulfing pattern on the spiders as well. So let me erase this line so you can see how accurate this will be next week. And then you could do this yourself. Again, follow along with me. Pick any stock really, and then you could forecast for your own account and manage risk accordingly. So I think that's what will happen. We'll see an upward move next week. To fill that little gap, I'm going to leave that line in there because 80% of the time gaps fill. There's a very small gap. Basically, that's just a price void right there. And this is the gap fill point. So I think we'll move up to that point. That will be a resistance area. And remember, keep an eye on volume because, and I'm going to do that too, I think that as we go higher, the volume will drop. Remember, this is no data right there, but next week I'll leave that line and we'll see whether or not the volume had followed that line and going lower. Finally, the VIX. If you are not following the volatility index for the S&P, then you need to put this on your watch list. Because look, this is what happened. I said last week we would go up to test that resistance right there. I drew that horizontal line right there. This was Friday's forecast. I drew it from Friday. I said we would go up, test that resistance, and pull back. And that's exactly what happened. Here was Friday's report that went out. Here's Monday, Tuesday, Wednesday, Thursday, Friday. There you go. Now I'm going to erase that line. And I'm going to tell you that I think that we could actually break down below that support level right there. Why am I thinking that? Because that's a big red candle. I think we'll go down to test this support level right now. So I think that will happen just like that, and then we will bounce. Now, why is that important? Why is this a leading indicator? Because volatility really is a measure of the emotional content of the market. You see, this volatility index, this VIX, works inversely to the S&P. So if the VIX is expected to go down to test this support, the opposite will happen for the S&P. The S&P will go up and test resistance. So keep an eye on this. I'm going to, once again, keep those lines in place so that you can learn how to do this yourself. If you're interested in learning more about some of the things that I've mentioned, just go to themarketguys.com, click on the video tab right there, and it'll bring you to our library where it's loaded with what we call market shots. You'll see that this video series is very, very short, 3 to maybe 7 minutes long, each one of these, so you can learn how to trade the gap. And I've mentioned that already in a few of the markets. You could learn what a reversal looks like, a role reversal. You can look at head and shoulders tops, which is very important because a lot of the stocks that we're looking at are showing signs of a head and shoulders top, and that's a major reversal pattern. So it'll help you manage risk. And then finally, the 1% rule. I think that out of all the videos that we have here, this 1% rule is the most important because it teaches you how to manage risk using a simple mathematical formula. Very, very simple, very easy to learn. So I'm AJ Monty with The Market Guys. Have a great weekend. We'll talk to you soon. So long.
For almost 3 decades, AJ Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these 2 questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have 2 services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you've taken the first step in the right direction. We look forward to having you as our newest member.